AS level October-November paper 2020, paper 12. Question number 16. Which item has no effect on the total equity of a limited company? Equity of a limited company means total shareholders fund, share capital plus reserves, premium, retained earning, etc. So which is not affecting the equity of a limited company? They are given options: bonus issue of share, dividend paid, right issue of share, upward revaluation of non-current asset. Revaluation profit or revaluation reserve, it will go to the limited company shareholders fund. It will make the changes. Right issue of share will increase the share capital. That also will bring the changes in the limited company's equity. Dividend paid will decrease the retained earning. So that will bring the changes in the limited company. But bonus issue of share. Bonus issue of share means company issue fully paid up shares to the existing ordinary shareholders. So that will change, the capital will increase and the money will adjust from reserves and surplus. So the all are in the same amount. That means capital amount will increase, reserves and other surplus amount will adjust, it will decrease. So it will not bring any changes in the equity of limited company. Correct answer is E. Next, information relating to W Limited for the year ended 31st December 2019. They are given retained earning, profit from operation, dividend paid, dividend proposed, bank loan interest. What is the question asking? What was the amount of retained earnings at 31st December 2019? Question is asking what is the closing retained earning. They are given the opening retained earning. So closing retained earning is equal to opening retained earning plus current year retained earning. So we have to calculate current year retained earning. Current year retained earning is equal to profit after interest and tax. Profit after interest and tax, here profit from operation is given 83,000. Dividend paid 20,000. Dividend proposed. Dividend proposed means that is not paid, just proposed. We will not deduct from profit. Bank loan interest. So profit after interest and tax. So deduct dividend paid, bank loan interest. So what is the amount? 83,000 minus 20,000 minus 16,000. The amount is 47,000 is the current year retained. And opening retained earning. What is the opening retained earning? 22,000. So 47,000 plus 22,000 is equal to 69,000. Correct answer is option D. Next, question number 18. Which financial information is not available for potential shareholders of a limited company? Potential shareholders of a limited company will get the financial information like income statement and balance sheet. So here the options are given: cash budget, income statement, notes to financial statement, statement of changes in equity. Statement of changes in equity is the part of balance sheet. So this will be available to shareholders. Note to financial statement is the extension of final account. It gives the explanation about the balance sheet. So that also available to them. Income statement, definitely it is available to them. So cash budget, that is the financial estimation in the future, financial estimation like cash inflow or outflow, that is not available to the shareholders. So correct answer is cash budget. The answer is easy. Question number 19. Following information is available. Revenue 600,000 given. Opening inventory, purchase, closing inventory, gross profit, expense, profit from operation. They are given one income statement. What was the rate of inventory turnover? Rate of inventory turnover. The question is, what is the inventory turnover ratio? In times. Inventory turnover in times is equal to, what is the equation? Cost of sales divided by average inventory multiply 100. Here the cost of sale is given, but we have to calculate the average inventory. So average inventory is equal to opening inventory plus closing inventory divided by 2. That is, opening inventory is how much? The opening inventory 46,000, closing inventory is 50,000. So 46,000 plus 50,000 divided by 2 is equal to, average inventory is equal to 96,000 divided by 2, 48,000 is the average inventory. Now we can apply this into the equation. Cost of sales. What is the cost of sales? Average inventory is 48,000. So cost of sales is given opening inventory plus purchase minus closing inventory is equal to cost of sales. Cost of sales is given 240,000. So 240,000 divided by average inventory 48,000 multiply 100 is equal to no need to multiply with 100. This is in times. So we have no need to multiply with 100. Equation 1 changes. There is no need to multiply with 100. So we have to only cost of sales divided by average inventory is equal to 5. Because it's in times, so no need to multiply with 100. So the correct answer is B. Next, question number 20. A company's financial statement for the year ended 31st December showed the following. Issued share capital, non-current liabilities, reserves including retained earnings. The company's profit from operation is given 160,000, and the profit for the year is 120,000. What is the difference between profit from operation and profit for the year? Profit for the year means profit after interest, tax and dividend. But profit from operation means the actual profit of the company, like sales minus cost of sales minus other expense. That is profit from operation. What is the question? Question is, what was the company's return on capital employed? Return on capital employed is equal to ROCE. ROCE is equal to net profit before interest and tax or profit from operation divided by capital employed. Divided by capital employed. Capital employed is equal to capital plus long-term liabilities. Capital employed is equal to capital plus long-term liabilities. Long-term liabilities. So here, what is the net profit? Net profit means net profit before interest and tax or profit from operation. Profit from operation is given in the question. That is 160,000 divided by capital employed. Capital employed is equal to capital plus long-term liabilities. What are the capital here? Capital is given. Issued share capital 150,000 and reserves and surplus. This company's capital means capital plus reserves and surplus and premium, etc. So here capital is 150,000 plus 250,000 plus long-term liability 280,000. So the total capital employed is equal to 150,000 plus 280,000 plus 250,000. That is 680,000. So capital employed is 680,000 multiply 100. Net or profit from operation divided by capital employed into 100. So what is the correct answer? 23.5%. Correct answer is A.